All right. Good evening, everyone. Hi, my name is Todd Brous. My friends call me Toddles. I'm here with Susan Schultz and Liz Otero, and we would like to welcome everyone to HBAP Startups. So let's get started. For those of you who are new to startups, we have a few announcements at the beginning of each meeting. We do some short networking breakout rooms, and then we'll come back together for our main event. First off is our mission. We're here to help foster and fortify an innovation and entrepreneur community coming out of the Harvard Business Analytics program. Our goal is to provide our members with the tools, knowledge, leadership, and confidence necessary to create and grow their businesses from the ground up. Why is that not working? My bad. And you're probably wondering how to engage with us. I'm going to put a couple of links into the Zoom chat of just some stuff that people can use. Bear with me. I put that there. All right. So, Susan.
Yes. So in the spirit of really building and fortifying this community of collaboration and inclusion, just a reminder to everybody, it's all about confidentiality and trust. And so unless otherwise specified, all rights are reserved by the presenters. And of course, we follow our honor code and also the feedback approach with some modification from Frances. So her model is for every one piece of tangy advice or opinion or whatever that you're giving, you need to give 5 pieces of sweet and wonderful advice. That's the best way for people to improve and get better and take feedback. And then the modification to that is that you can always just completely skip the tangy piece of advice and only go for supportive and positive advice per Kelly Kimball. And then, as always, if anyone feels like there's a potential worry around confidentiality or conflict of interest, just reach out to Todd or Liz or me, and we will help you figure it out. Thanks, Todd.
All right. Hold on, bear with me, because I'm going to try and actually welcome new folks. Anybody here new? I think everyone has been here before, but what we're going to do, oh, Wesley, raise hands. Perfect. We can't hear you. You're muted. All right.
So, hey guys, yeah, I just thought I'd introduce myself. Muffy was kind enough to invite me along. So I'm Wes McComb, the founder and CEO of a company called Value Acceptance. So it's a AI software company. And we have a product called Floor App. We generate smart floor plans for facility management and loan compliance. And we recently became an integrator for Fannie Mae and Freddie Mac, basically the first Uber app for loan compliance. Thanks.
Awesome. Welcome. Thanks for joining us. All right. Let me.
He is from Australia.
And he's from Australia. Oh, we've got a bunch of people from Australia. Wonderful. Just a couple of announcements upcoming. Well, today is the 10th. Next week, Simone Gordon, the Black Fairy Godmother, will be joining us. May 24th, and Fernie Chen, he's an HBAPper from HBAP Cohort 1. He is the CEO of Dots Live. He'll be coming to talk about what he's working on. May 31st, Derek Ali, the CEO of engineers.com. That is going to be a wonderful presentation from Derek. And then special announcement, June 14th, Harvard Business School professor Tom Eisenman, the author of Why Startups Fail, will be joining us for a fireside chat, which our very own Kelly Kimball will be running. So that is not to miss. So we want everyone to put that June 14th on your calendars. Please join us for that special day. June 21st, Rosa Meza, she does data analytics at Meta. And on July 12th, Phil Morris, the entrepreneurship of acting. So that's our upcoming schedule. Please put those in your calendar. We would love for everyone to come join us for this. Oh, and lastly, the pitch competition. For those of you who are planning on entering the Harvard Business Analytics Program pitch competition, the deadline is May 17th. I am entering, so it should be fun. Was that else? Anything else?
Yep. So just go back.
Go back.
Yep. So the other thing is the actual pitch competition itself is online, virtual live, as they say, on, I believe it's June 7th. And so come and see the finalists and support them by watching what they're doing, and because it's going to be fun. It'll be exciting to see. And So there's a sign up. I think it's open to anyone, not just HBAPers. So if any of you that are not, an HBAPer currently, let us know if you want to go to that pitch competition and see the finalists pitch to all of us and to the judges.
All right, I'm doing my best here to put Mafe all in the same room, and I'm failing to do that because Zoom doesn't like me. Let me.
Wow, Tad remembered.
I'm trying. Bear with me. Room 4. All right, I'm putting a couple people into room 4, and it'll be fun. All right, I'm going to open up the breakout rooms. Feel free. It'll be about 5-6 minutes, and after that, we'll see you all back in here. All right. Welcome back. I hope everyone had some fun in their breakout rooms. Just as a little reminder, please fill out the survey when you exit Zoom. When you exit Zoom, there'll be a pop-up in your web browser. Filling out surveys saves lives. It reduces your cholesterol level. It's great for your complexion. It increases stamina. Again, we're data analytics people, and without data, we become very sad and lost and depressed. So save a tree, kill a beaver, fill out the darn surveys so we have data. And after we're done, we'll stop recording. And please stick around for some overtime. And
yep, before you do that, yes, thank you. So I put into the chat the sign-up sheet for attending the pitch competition. So you can do that, and you can see the time and the date and reserve your spot if you want to come listen and encourage the finalists on. Okay.
Yeah, I'd love to put the link to the sign up in there.
I did. I put it into the chat.
All right, I didn't see it. Okay. All right. So first off, before I introduce Keith and Derek, I want to thank Mafe for bringing our next guests to HBAP Startups. Thank you, Mafe. And tonight's guests are Keith Brewer and Derek Brewer. And just in case everyone here is not aware of this, they are in fact related. They were born and raised in Southern California and grew up surfing in Hermosa Beach. They both received their finance degrees from Cal State Dominguez Hills. They've been in the insurance business for 22 years, and 12 years ago, after having been in the industry for 10 years, I did the math, they started their own insurance brokerage called B2 Insurance Services. Keith and Derek specialize in all lines of business insurance, including general liability, professional liability, workers' comp, EPLI, I don't know what that is, group health, and a whole lot more. They currently write over $20 million in insurance premiums, and it is my honor to introduce tonight's speakers, Keith and Derek Brewer. Now, without further ado, if we could all please briefly unmute ourselves, and let's give a warm round of applause. So let me stop sharing. And Keith, Derek, thank you for joining us.
Thanks for having us. We're excited.
Appreciate it.
So
talk to us.
Yeah.
What,
yeah,
we need insurance.
Yeah. So like you mentioned, we've been around for 22 years. We've insured everything from startups to companies with 1,500 employees. And yeah, so for startups, really, I mean, one of the policies you're going to have to start with is a general liability policy. Everyone's going to need that. If you're going to have an office, the landlord's going to want you to move in with some form of insurance, add the landlord as additional insured on that policy. So starting with basics, you're definitely going to have a general liability policy. And then if you're a consultant, if you're giving advice, kind of like an insurance agent like ourselves, we had to get E&O or professional liability insurance as well. So those are two of the probably most important things just as a startup company you're going to need right off the bat. And if you start hiring employees, and well, if you're in the US, you're going to need workers' comp insurance to protect them if they get injured on the job. And
some other insurance that you might need if you're doing a partnership with, let's just say 4 friends start a business. You are going to want to get a buy-sell agreement and look into getting a key person life insurance. Otherwise, that person's significant other will now be your partner if you end up passing. So you really want to protect the company, get it valuated and do a nice buy-sell agreement and fund it with life insurance, so that you can either, buy out the significant other or replace that person with someone else.
So what does buy-sell mean? What's a buy-sell agreement?
So a buy-sell agreement is an agreement put in place by lawyers that says, hey, the business is valuated, let's just say there's 4 partners, and let's just say it's valuated at $4 million. That buy-sell agreement is going to say, hey, you have to, if one of the partners passes, you will now owe their spouse their share of the company. So instead of coming out with, or they're your partner, right? So that spouse becomes your partner, and that person, he or she, may not have any idea of the business or be able to contribute at all. So buy-sell allows you to buy that spouse out of the business, and usually it's funded with life insurance.
So I'm just gonna, and I will try not to interrupt all the time, but both my lawyer and my insurance agent have never brought up what you've said. They have a completely different approach to this. So can you talk some more about that? Honest to God, I mean, they've never said anything about
like, again, a buy-sell agreement is if you have partners in the biz, right? So it's, if you guys, if you formed it with like 3 or 4 people, but otherwise, I don't see how you're protecting the business and what you started.
For instance, we could talk about my brother and I on the B2 insurance together. If something happens to my brother, he goes on a surf trip and he passes, cross our fingers that never happens, but now his wife is my partner. They have
Totally get it. Yep.
They have 2 children and she needs to live. And without a buy-sell agreement protecting the business, I'm going to have to hire a new person to take my brother's place. So another CEO. So that's a couple $100,000 a year. And I'm going to have to pay off his wife. So if you have multiple partners, key person insurance is the way to do it. If you have 2 partners like my brother and I, there's also a cross-purchase agreement. The cross-purchase agreement just buys the other spouse out of the policy of the agreement. And key person is if you have multiple people, then you just get a key person policy and pay out that other spouse that way. But
okay, so I'll just say one more thing and then I'll stop, which is maybe the lawyer and the insurance broker that I'm working with are doing this through our founder agreements, and my co-founder has owned shares, so maybe we're taking care of it that way. But this is a good thing for me to take a look at, because this is like, I mean, can you imagine working for a year with a lawyer and insurance company and they've never, ever, ever brought this up? So I am, like, whoa.
Yeah.
Another thing we're talking about earlier was D&O insurance, directors and officers. And this is another insurance if you have multiple partners, you have that have ownership, a CFO, a treasurer, CEO, vice president. And for instance, I have a medical group that has masseuses, and they have a chiropractic and medical group together. And they decided to hire these masseuses as 1099 employees. Okay. Well, the 1099ers got a lawyer involved saying, sorry, we only work for this medical group. And we were classified wrongly. We should have been W-2'd. We should have got meal breaks, overtime, etc. We only work for this group. That being said, the lawyer is not only bringing the corporation into the lawsuit, they're bringing each individual partner into that lawsuit. And guess what? The partner didn't have D&O insurance. So they're getting sued personally as well, but D&O would have picked that up. But now it's not. It's also if you make a decision, one of the partners makes a decision to say, oh, let's get a loan, and you default on the loan, and it was that partner's idea to default on the loan or not pay the loan, then the bank comes after the company, sues the company and the individuals, and your D&O would pick up that exposure as well.
The biggest thing, the D&O biggest exposure though, is let's just say you're in a big construction company and you're doing environmental cleanup. We had a company that hired a new hire up, and then his former company came and sued the new company for trade infringement and trade secrets. And there was nothing there, but just for hiring an employee, that other company that you hired, that either took them from, can come and sue you. And even though there might not be anything there, there can be a big claim and lawsuits, and D&O is the one to cover you for
that. Is it okay if we ask people to just chime in, or do you guys want to talk about specific topics in order? Okay.
Yeah, chime in, ask questions.
All right, Michael, you've got your hand up.
Hey guys, great to talk to you. I will probably be reaching out to you maybe sometime, hopefully soon. I was going to ask a loaded question, but I think in the spirit of our group, we're a pretty close group. I'll say it this way. Maybe share some of your insights. A lot of people may be thinking, we don't have revenue yet, or we don't have employees. Or, oh, I've got an umbrella policy on my home, isn't that supposed to cover something? Maybe just talk about however it comes to you, what you hear or think about when people say that.
I think that when you mention personal lines of insurance, people often get confused. They think they have an umbrella policy, which will cover them for anything they do in business as well. Well, it's completely separate. Home and auto is a separate insurance, separate coverage. So if you have a business, you need to have your liabilities, and we'll see them up to only like $1 million. But if your company's doing, 30 million, you should have a 5 million umbrella on top of your normal underlying umbrella. General liability limits of 1 million, 2 million is what we see. But yeah, a lot of people start up. My brother had a company that had, I don't know, 80 employees with no insurance yet. And he bought a Ferrari, and he's like, well, yeah, I have this company. And my brother's like, do you have any insurance? And he's like, no. And so they ended up going to 800 employees, but Keith can tell the story a little bit better, but yeah.
Yeah, I think as far as getting insurance, if you're consulting in any capacity, or you're doing business, but you're not generating revenue, but the day you start doing business, the day you commence with a client of yours, or however you're generating revenue, you should get insurance. General liability policy at a minimum, and E&O at a minimum. If you don't have employees, you don't need workers' comp, so you're good there.
And the workers' comp is supposed to start the day your employee starts. So it's not like you hire them and then a month later you get the workers' comp.
Yeah, and that all goes in preparation as well. Depending on what type of business you're in, the insurance can take a week or two to get underwritten and put into force. So a lot of people just go out there like gangbusters, start getting clients, start working with clients, and oh no, I need insurance. Well, that's going to take another week or two to even get the quote approved and get it signed. So you want to pre-plan before you start working with clients or hiring employees.
And if you're getting investors, they're going to want to know how much all your costs are to the business, right? So and insurance can get pretty high in certain fields.
Yeah, I'm going to ask you about how high in a second, but Victor's got his hand up.
Yes, thanks. I really don't know much about this topic, so if I sound naive, it's because I am. I'm wondering, are there state regulations, for example, that when you start a business, when you sign articles of incorporation, when you sign founder agreements, that the states require certain insurances along the lines of New Jersey requiring auto insurance, something like that?
Only thing that the state would require would be workers' comp.
For yeah.
Yeah, that's the only
But
thing
beyond that one, there's no particular requirement.
No.
Okay, so then the flip side of that question, do you find people starting companies putting in their articles of incorporation that they must have, and then obviously it's an independent agreement for their company, but that they agree in incorporating to get insurance A, B, C, D, and E to compel the founders or the senior executives making those decisions to make sure that those are in place? Or is it really just, as you mentioned, Keith, they should have, but there's nothing compelling?
It's not like the DMV saying you need your auto insurance or you don't get your registration tags. In the construction industry, the construction companies will make sure that you have workers' comp and they need a certificate as well as general liability.
And
But
the construction to do work and get your license with the state of California, you need to be bonded in construction. So that's when you absolutely have to have.
Okay, and the other question I asked earlier was only half in jest. I'm wondering if you have a founder, for example, who starts a cognitive decline, where does errors and omissions insurance or D&O insurance draw a line and say that's not covered anymore for their mistakes or their
cognitive decline? I think that it's you got to get a disability insurance to cover that person, and but like E&O or D&O insurance is not going to cover someone's cognitive.
Right. So I'm sorry, Keith, please.
Yeah, I mean, it might, if that person was making wrong decisions, but it wasn't, necessarily it was due to disease or whatever. I don't know. That's a gray area, actually.
Yeah, if he started making bad decisions for the company, D&O would be covered.
But if someone's making bad decisions and it's determined that they have dementia, just to throw it out there, or early cognitive decline, do those insurances kind of say, well, that's a medical condition, it's not really an omission, and therefore it's not covered under that insurance?
Actually,
no, I haven't seen that before.
No.
But it is a good question. I mean, that'd probably be a good question to do some more research on. Really haven't had that instance in our 22 years of experience. But
that's encouraging, but I imagine, like anything, when something is challenged, it can get pretty entangled. My thoughts to Kelly's comment is it was personal for me, starting late career in this arena. So if I make a mistake, I want to make sure that I don't make the mistake of not having coverage.
Right.
Thanks.
Yeah.
Yep. Thanks, Victor. Great questions. We'll go to Cynthia and then we'll go to Evan.
Hi. Yeah, insurance is so confusing. I've always had trouble with it my entire career. But one of the big things I feel like is, and I'm still 100% confused about it, is we're a business analytics group. So what's the current status of privacy, data breaches, cybersecurity, all that stuff? What do we need to do? Because we're collecting data before we even have a business lots of times. Once we have a business, we don't have no money. And, we're having lots of people that are touching on it, and we're grabbing, data from a whole bunch of different places to get our startup going. What do we do? How do we protect ourselves?
You have to get cyber insurance. I mean,
so what does it cover? What's the risks? How do you de-risk that through insurance and make sure that we are actually getting covered for the things that we do?
So there's an application, a supplemental application, kind of like the errors and omission application, but there's a cyber application that asks all these questions about what you're doing, what kind of data are you holding on to, and from there, they'll go and underwrite and give a policy. Cyber has a lot of different nuances that could be covered. Data breach, there's a million different nuances in cyber insurance that could be covered. So basically, what we have a supplemental application that has 15 questions or so or more, and we just fill that out, send that to our underwriter, and they'll design a plan that pretty much fits your business.
But
So
these underwriters will, yeah.
I was going to say, how easy is it to get that insurance, and how expensive is it relative to like a D&O or a general liability insurance?
Starting is about $2,500 for the year for cyber insurance.
Okay.
Yeah,
And that includes privacy data too, privacy breaches and data breaches. Okay.
Yeah. They're going to recommend before they even write the policy that you have your checks and balances, your security, up and running. And if you don't, they're going to want to see certificates or copies of what kind of security you're doing to make sure, because unfortunately you buy insurance, but then you're buying insurance and spending all this insurance dollars for your whole life, but they don't want you to use that insurance. And the minute you do, you can be dropped, right? So, right. I had one with $1 million cyber claim, and I searched for a year trying to get them covered, and I could not get them covered. So it's partially, it wasn't their fault, but could have they had some checks and balances to make sure that didn't happen? Yeah, they could have.
What happened to that customer after you couldn't find them insurance for a year? Did they go out of business, or did they just exist without it?
They got so huge that they were able to self-insure.
Beautiful.
Yeah, they got so big that they just self-insured.
Oh, dreams! I can dream from your words, from your mouth. I'm like, oh, self-insure.
But no one wants to have to self-insure. If they could find insurance, they would rather have someone else flip the bill.
Awesome, Cynthia. Did that answer your question?
Yes.
Sorry for interrupting. Thank you. Yeah, great question, Cynthia. Evan, and then we'll go to Kelly.
Hi, is there a state requirement for insurance, a state mandate for insurance, depending upon where you're incorporated? No, I'm seeing.
There's no state mandate for insurance right now. The only thing that you have to have is if you hire an employee, you need workers' comp. But other than that, there is no state mandate.
There's no really state mandate, but one of the things that I find is every time you work with somebody, they want you to sign a contract, and that contract makes you have insurance. So even though the state doesn't have it, your contract with whoever you're working with is going to make you have it.
Which is crazy you mentioned that, because I'll have consultants that work with huge companies, and like they'll do marketing for certain huge companies, and they won't even ask for the insurance. And I'm just like, how have you been going for 5 years and not have one piece of insurance or been requested to have it? But it happens. Not to say you should always have insurance.
Thank you. I have a follow-up question. Where's the go-to marketplace to get started for a new startup? Is there a centralized location to shop for insurance, or no?
I would reach out to a broker like us, like B2 Insurance. There are some payroll companies that specialize in payroll, but they throw in like a workers' comp, or they'll throw in certain other lines of insurance. But you want someone that specializes in insurance, make sure it's right for you. It's not cookie cutter. And so there are some online things out there, but you really need to talk to a professional about it.
Thank you very much.
Thanks, Evan. Kelly, and then we'll go to Victor.
Yeah, thank you, guys. I absolutely believe this is probably one of the more important Wednesdays we could have if you're in the startup group. I mean, the most overlooked thing I think with startups is insurance. If you want to bring a director on board, you better have D&O, and no director worth their salt will come on board a company unless you have D&O insurance. Most investments, at least price round investments, or sophisticated investors, are going to look at your insurance package, and they're going to decide whether or not, forget whether you have good enough insurance, are you actually a good management team that would actually have covered this before? They're going to judge you based upon how well you cover your company. And by the way, just as an aside, B2 Insurance, I have a company called V2 Insurance, and it's just crazy. Every time they say that, I jump. So I think a question, especially for the startup group, is there a package of insurance that you would recommend to anybody starting up a company? I mean, they're the basic insurance policies that if you're starting your company tomorrow, you have a partner, you're about to invest your own money in a company, you're about to go forward. What does that basic package look like? Do you offer it or do you recommend it, if there is one?
Yeah, I mean, a basic package, like my brother recommended earlier, you're going to have general liability insurance, right? But beyond that, you're going to have workers' comp insurance. One insurance that's quite oftenly overlooked is EPLI insurance. This is employment practices liability insurance. One of the biggest lawsuits going on right now. What it protects you against is discrimination, sexual harassment, wage per hour claims. So the minute you fire an employee, guaranteed 99 times out of 100, they're going to come back with a lawsuit against you, and it will be, oh, that person was discriminatory against me, or that person, they didn't pay me my wages, stuff like that. So EPLI insurance covers that, and EPLI is expensive. For if you're looking at like a 20 per employee group size, you're going to be spending $6 to 10 grand just on EPLI insurance alone.
So would you recommend that you do that after a certain amount of employees are actually hired, the first employee that's hired?
First employee that's hired, I would do it.
Yeah.
Yeah.
Be interesting to see a layering, like how as you grow your company, would you start layering the insurance, where it's important, where it's not important until a certain point? That would be a fascinating little chart to have.
Yeah.
And in fact, that towards one of my questions is, what are the budgets? Like, how much money do we need to set aside out of my own pocket if we're bootstrapping, or from some other investor? And Kelly, to your point, an outside investor is not going to give you an investment unless you already have the insurance.
Yeah, I didn't say they wouldn't give it, but they're going to judge the
Right.
quality of the management team by
Right.
how prepared you are for this. How, are you actually developing a company in a responsible manner? You can risk it all day long. I mean, that's really what it is. You're either taking personal or corporate liability, and your company's going to go south, and you're rolling the dice with that. You shouldn't, but if you don't get insurance, that's what you're doing. So anyway, I'm sorry. It's not my show. It's your show.
No. Kelly, thanks for that, to clarify. I mean, I think what is spinning in my head is, how much money do I need? What do I need to do? That scale, that schedule that you were describing, Kelly, is really valuable.
Yeah, this is the thing we talked about just before, right? Which is like, what's the what and the when? What are the triggers, right? Like, should we get it all at the very beginning, or is there a sequencing that's possible, or what's the timing of what to get?
Yeah, I would say that you would have to work with your broker closely, and working with a broker, I think Derek was touching on this earlier. Any business should only work with insurance brokers that have access to multiple carriers, Travelers, Hartford, Lloyd's of London. If you're working with a State Farm or a Farmers, these guys are called captive agents, but they can't necessarily shop outside their own products. And if they can't shop outside their own products, you're pigeonholed to their own policy.
I think we lost Keith again.
Yeah. Oh, there he's back. Yeah.
We lost you there for a second, Keith.
Yeah, so you're subject to their limits on their policies, and if they don't want to write in a certain area, well, unfortunately, you open a new building that's close to brush area. Sorry, if it's State Farm, that's your broker or your agent, not your broker, but your agent. Sorry, we can't insure that building. Then you have to go look elsewhere. So I would say any business should just work with a broker like my brother and myself. You could Google insurance broker in your area, but we are licensed in all states. And so we could be your broker, anyone else could be your broker. But like I said, I would suggest getting a broker that has access. We're part of a larger cluster of a main umbrella cluster that has about 500 insurance agents under it. So our buying power that we have with each carrier requires brokers to produce at least $1 million of business with them. So to do that on your own and produce $1 million of business with each carrier out there, Hartford, Travelers, Mercury, you name it, that's hard to do as one single broker. But if you join a cluster like we have, and you have buying power of 500 other agents, you get.
Looks like he got stymied again.
Derek, you have to fill it. You have to continue the sentence where he left off. Okay.
Yeah, I can do that.
Yeah.
So yeah, he's just saying we have a big buying power. And we give these carriers so much business that we can also ask for additional discounts. So yeah. But you also want to be nimble, right? You want to be able to touch your clients and respond to their questions. So I think you want an agency that's in between being super large and one that's more boutique like we are. The other thing I would like to say though is your Allstates, your State Farm, your Farmers, when they create a policy for you, they can add in EPLI, right? And they'll attach it to their general liability policy, and they can add in cyber. But a lot of these policies are very stripped down and don't have a ton of coverage to it. So you really have to look at your policy and make sure that they're not stripped down, that it's a full boat. Like they're adding these policies for a couple $100, and someone might say, wow, that's awesome. I'm all in for $3,000 when your EPLI or your cyber or your D&O should be $3,000 by itself, right? So how can you add in a policy for $200 and someone else is selling it for $3,000? Well, that should be a red flag. So yeah, you really, like my brother said, you want to engage in both in a broker. And I mean, you can have a cheap general liability policy cover just the basics through a State Farm or Allstate, but when it gets into the bigger, stickier solutions, you want to have a broker shop it all out and not bundle it with a GL insurance, general liability.
And what about umbrellas? I mean, like, to me, that's about the rain and water, not insurance.
Yeah, so an umbrella policy, really, when we look at that, you want to look at what is your company, can it be sued for? Okay. How much damage can you cause to someone else by screwing up their business? And most of the time, if you have $1 million policy, the lawyers are going to go after the insurance dollars and nothing else. Okay, most of the time. But if you're a garbage company and you flatten 3 people on the road, yeah, they're probably going to go after you and try to get a little more than just $1 million, right? So, and speaking of, you'll see garbage companies have like $10 million umbrella. So it's really, you got to look at your company and see how much damage can it cause someone else financially. And then that's how many millions of dollars you kind of want to get. But I have a engineering company. They make a lot of money. They're very conservative. They wanted a $10 million policy. And then I went to the underwriters and the underwriters are like, no, there is no risk for this. You know, you guys aren't causing, you don't have a risk to cause anybody $10 million worth of damage. We'll offer you 5. We're not giving you 10. So there'll be situations where they won't even sell that kind of umbrella policy.
Interesting. Victor, and then we'll go to Michael.
Yeah, thank you. Derek, I'm thinking while we're talking about disaster recovery, and the question goes pretty wide, but I'll try to narrow it down. When you have a disaster, right, that forces you to invoke your disaster recovery plan, which could include something like an offsite office or a secondary data center, those kind of costs that you're paying probably under contract to have those things available to you, how much of that is, if any, is recoverable from what type of insurance?
So let's just say you're a manufacturing company, you have a bunch of inventory, right? And then a fire blasts through or a flood, you know, if you're near an ocean, and it ruins all of your, let's say you're a vitamin company, and it ruins all your vitamins. Insurance does cover that. So that's another big topic, though. A lot of people will say, I have only 40,000 of product at any one time, when they really have 300,000, but they were trying to cut costs on insurance, and the broker might have said, oh yeah, let's just cover you for a base, or didn't check back in with the client after they've done really well, and all of a sudden they went from 40,000 of product into 150. Well, you get what's on your insurance policy. So if you only have 40, you get 40.
And that insurance, though, only covers the costs, not the profit.
Yep.
So if you lost all that,
there's potential profit. No, there can be covered for the profit on it.
Can get the but then at what price? Like how much?
Exactly.
Like, wait a second, I'm not making that much money.
Right.
Yeah. So everything comes at a cost. So you can be insurance rich, or you can be cash rich.
Sorry.
So you must update the insurance regularly. Is there like a... Okay.
Sorry, go ahead, Mafeng.
No, I wanted to go back to the question because maybe I didn't ask it fully. I'm thinking about, I understand the recovery of contents and equipment and injuries on site and that kind of thing. What I was referring to was specifically the costs of execution in a disaster recovery remote facility. You know, you may pay a certain amount every year to have that available, but when you execute, you may have an operating expense above the, let's say, the retention cost to have that available to you. Is that recoverable from insurance or no? As part of a loss of something like a fire?
Yeah. So anytime you have a loss, like all of it's recoverable, as long as you put it in your policy. So there's options to cover yourself. It just has to be made sure it's put in the policy. So like loss of business income, I mean, that's all recoverable. In any actions you need to bring your company back to whole, whatever those dollars were, that's recoverable as well. Again, as long as you have proper insurance and coverage.
And the insurance for that would be the general liability insurance?
Not the general liability, no. So it depends on, well, it could be the general liability it's more on the property side. So the property side, so it's called a BOP. So it has general liability and property all in one policy.
Okay.
And so it's more on the property side that you would recoup the business income from, or product.
And I imagine that also gets into whether you're leasing or owning your property and that kind of thing.
Absolutely.
And I also would imagine, and please correct me, but if you're, to your earlier statement, running a manufacturing operation, an R&D operation, an office operation, the types and levels of coverages vary depending on, let's put the people aside for a moment, depending on the value of contents. Is that how it works? So for example, if you're an R&D lab and you lose your IP because your in-process experiments blew up in the fire, I know these are outlier cases, but I'm just intrigued as to where they fall from your perspective.
Yeah, so the R&D lab, I mean, so again, you know, kind of, I've ran into this a couple of times. It's hard to quantify, right, on what your potential loss is. So you have to, I'm going to just close the door real quick.
Mm-hmm.
That's a good question, Victor.
So again, it kind of comes into a case by case situation, but yeah, the companies have to come in and underwrite and really determine
what the risk is, right? Okay, fair enough. Thank you.
Thanks, Victor. Michael, and then we'll go to Nick.
Yeah, I never got to say thank you last time, so thank you for that. My follow-up question, which is similar to what Cynthia was saying, is, most of us in this room are probably idea economy, data type oriented type businesses. But I wanted to get your thoughts. Maybe you guys have, a war story or just some thoughts about what someone should in this room might be looking out for. We hear about these examples, right, of, that owner promised me that I would own 10% of the company. When we sketched out the idea for this company on a bar napkin, over margaritas or some, stuff, all these kinds of oral type agreements, very early startups. Just thoughts on that and insurance.
To protect someone that, like, hey, I was supposed to own 40% instead of 10% of the business, like things like that.
That could be an example, or just, I don't know, maybe someone said, if that's obviously the case where it goes really well, or, like you said, there's a disgruntled employee that said, no, they told me I was only going to be able to make 40,000 now, but then once we get that next funding, that next investor, they would raise my salary up to what it should be, all that kind of. I don't have a specific example, just one to get your thoughts.
Unfortunately, insurance doesn't cover those types of things. Hopefully everybody did their lawyer stuff and got lawyered up before they entered an agreement. There's no insurance that would cover those kind of topics. Insurance is if you think about it, what can cause a catastrophe, like a fire, water, theft, things of those kind of nature.
No, thank you. And like I said, I wasn't really looking for, a magic insurance. I think just, again, trying not to ask a semi-loaded, not loaded question. I work in finance. So typically, finance, I think Link was asking earlier, we get put in charge of insurance, typically, or that or legal, and, it's always that sort of dance of, I'm sure you guys hear it all the time, right? Of like, again, where's that balance fall of, okay, I want to be covered, but I don't have $25,000 to spend on this, how much can you get me for $5,000, or, whatever that sort of, dance is. And I just wanted to make people aware of that, like, and again, I'm a big believer in working with, an insurance broker. And I like I said, when I reach out to you guys, I've got someone now who I was kind of digging around, and, they, as far as they can tell, they've got nothing, right? They're these people who think they're covered by their homeowner's umbrella policy. But again, we'll talk about that. So thank you so much.
Yeah, absolutely.
Thanks, Mike. Nick.
Thank you. So the question I had goes back to one of the insurance policies you all were talking about earlier, and that was if you were starting off as a consultant and you needed coverage, what kind of coverage you would get. And I was wondering if you could reiterate what you were saying about that.
Yeah, as a consultant, two of the policies you're absolutely going to need is professional or E&O insurance and general liability policy. Just to start off, if you're a single consultant, no employees, you're definitely, number one, going to have professional liability. If you're giving advice, you're consulting a business, just kind of like what we're doing now. We have to have E&O insurance as insurance brokers. So that's definitely something you would need in general liability. General liability covers for contracts that you're having with your clients, those type of things. So, and slip and fall. But if you're a consultant, if you're working out of your house, you're not going to really need slip and fall if you don't have clients coming to your house. But
a lot of the professional lines, carriers don't sell the unless you have GL underlying as well. So you kind of have to have both. But the GL is usually like $500 a year, super small cost.
Okay. And what about the other one?
The professional lines?
Yeah.
You're usually starting at 5,000 minimum, and then it goes up from there.
Yeah, it all depends on what industry you are and what your revenues are. If you're starting off making 200 grand, all these carriers have minimum premiums, which they call it. A lot of them around 5,000. Maybe there's one that starts at 2,500, but it will ratchet up. Say you're making $1 million now, each extra 100,000 or so is going to be a higher price for or higher premium.
So what do you suggest to do? So if, let's get personal. So if I'm in the beginning stages of being a consultant, I don't have this insurance, but I also am working on still just getting clients in general. Would you still recommend that insurance be a part of it, or is it after you've secured the clients, then you start?
I would say when you're in talks of getting your first contract signed with your client,
okay,
get the insurance at that point. I mean, you probably want to have it before you start doing any real work for the client, and the client's probably going to want to see insurance. If you're consulting and you're having a contract, most other businesses are going to want to make sure you have insurance. Sometimes, like my brother said, though, we found a lot of consultants that just rolled without insurance and no one asked, and so they're still doing it. But if you want to protect yourself, and also a lot of times clients are going to want to make sure you have insurance before you sign the contract.
Okay. Thank you.
Thanks,
Yep.
Nick. Great question. Susan.
I wanted to make a comment and probably turn it into a question as well. So my company is a tech company. We are deliberately not doing consulting. We're trying to just be tech and no services. And yet I have E&O insurance. And so I want to say that to say what my insurance broker said as to the why, and then hear what you think about that. They said, even though you're a tech company, are you having conversations with customers? Are you helping them decide things like, for us, which teams are they going to do the pilots with, things like that? They said anything where you are offering your opinion could be considered consulting, and that's why they said you need to get E&O insurance. So because you answered like if you're consulting E&O, so I wanted to hear your thoughts about if you're tech, but you are consultative as you're doing your tech, do you think you need E&O insurance?
I'd say 90% of our tech companies, or 99% of our tech companies, have E&O. Okay. They kind of just go hand in hand. If you're offering cloud services, you're still giving advice on which cloud and which department of your cloud service they're going to use. It just goes hand in hand. Tech and E&O are pretty much always, you have to have both.
Okay. All right. Cool. Thanks. This is great stuff, you guys. I'm so happy you're here.
No problem.
Thanks, Susan. Andrea.
Hi. Thank you, everyone. Great questions too, and information. My question goes more into a follow-up of the question I put in the comment. So we've been talking about consumption of the insurance, right? We need insurance for our businesses to protect our work against our clients as a tech company, consultants, and all that. How about now creating an insurance? So I'm working with a company not in the US, outside of the US, in another country, and I'm creating an insurance. And this is an insurance for the sports industry, for athletes. And how does that work in the US? If someone wants to create an insurance that will cover certain specific or certain industry and area. For example, this is for sport athletes that get injured and then they want to get reinstated into the sport. So a normal medical insurance will cover the medical process, the hospital, the ambulance, the doctors, but usually they don't cover going back into the sport. They will cover the rehabilitation, which is not the same. But when they are ready to go back into the sports, there's a new process that has to happen. So we're trying to create an insurance that will cover everything up to the point that where the athletes is back into the sport. So in this case, I will be looking for a broker, because we're working with a broker in that country. If I will be looking for a broker in the US to create a similar type of insurance, so would that be with someone like you guys, like your company?
Yeah, I mean, the only one that's going to do that, we would have to reach out to what we call wholesalers of insurance that deal with carriers like Lloyd's of London, Lloyd's, and if there's only a few carriers that would entertain that type of insurance. So
there's also captive solutions.
Yes, yeah. So there's insurance companies that are captive, and you can insure anything you want. You pay a premium for that. But yeah, you're right, Derek. I think only captive might cover that. But yeah, you could go through a broker like us to go find you a captive. Exactly. So yeah, you'd have to find a broker that has access to captive insurance, and which we do. That's for that type of insurance. That's pretty much what you'd have to do.
Okay, great, thanks.
Thanks, Andrea. Nick, you've got your hand up again.
I do. So the next question I have is, if someone was starting up a tech company like a social media, what protections do you need for like does a Facebook need protection for like the the interpersonal interactions between people on the website, or what kind of insurance covers you from liability if someone misuses the website, or do you not need that at all?
That probably is covered under a media policy. If it's social media, that's a little different than E&O and professional liability. It's called a media insurance policy. And that would probably be covered in a media policy. I believe so.
Okay. And that would be like a standard thing, like a social media company would go out and acquire. Is that correct?
Yeah, that's a type of insurance you could acquire from any broker. Should be able to sell a media policy.
Okay.
Yeah.
Thank you.
Thanks, Nick.
Yep.
So quick question. How often should we be speaking to our insurance brokers? When I was running my former company, my insurance broker was constantly reaching out to me and telling me that I wasn't speaking to them often enough. Now, I don't know whether that was because they were trying to sell me more insurance or just because I was good conversation.
Yes, I would say every 6 months, especially if you're growing and you're adding employees or your revenue is growing, because a lot of tech companies, their policies are audited. So you're going to get audited at the end of the year. And in the beginning of the year, you say, hey, on my application, I think I might, because you don't want to pay those premiums up front, right? Everyone wants to save money. I think I'm going to do 200,000. Oh, whoops, I gained 12 clients and I did 2 million. Well, you're going to be audited and there's going to be an audit bill at the end of the year. So instead of that $5,000 you paid up front, now it's 20,000. So you would want to talk to your broker mid-year and say, hey, guys, I just picked up 12 new clients and my revenue is going to increase. What should I do here? And we would say, put money in the bank to pay for your audit at the end of the year.
And what does that audit look like? What does that process look like?
Yes. So profit and loss and a balance sheet that the auditor, the adjuster from the insurance company is going to want to see at the end of the year.
So that it's not like, you know, I mean, it's doable. It's not like this is tearing apart of the organization.
But that's probably a good problem you had, right? You thought you're going to make 200 grand and now you're making $1 million. And so you could probably afford that extra 30,000, but it does hurt, you know, if you didn't forecast for that. We had one client that got a $75,000 audit at the end of the year because they relied on us to use last year's numbers and didn't tell us that their revenues increased. And so you do want to have communication with your brokers, especially if you're growing.
Got it. Yeah, so that answers my question. It wasn't because I was good conversation. It was because they were trying to stay on top of our growth. Okay, that's really helpful. But that audit process is now scaring me. And it's something, this is so helpful. This is so valuable, this information. Thank you. All right, I see more hands up. Sri, and then we'll go to Victor. I don't know.
Yeah, hi. Thank you. Sorry, apologies. I'm driving my Tesla and just trying to pay attention, but sorry, but not on video yet. Okay. So I recently launched Liability, which is a podcasting audiobook and ebook, okay, as a platform in iPhone and stuff. My question on the liability insurance is, what kind of insurance worth it? Because I will be having a network effect with people trying to host their content on my podcasting platform. Honestly, I do not know what content they bring in, even though I ask them to take ownership of their content, etc. So as a platform provider, what would be the right thing to do in terms of getting an insurance to protect? Thanks.
Yeah, I could answer that. That'd be a media platform again, what I was talking about earlier. We have one client that does reviews, is a gamer review, and people add content, and he has a media policy. So it sounds, even though you're not a gamer, but it sounds similar in that arena that you would probably have a media policy. And a media policy is going to be a supplemental application, like I talked about before, with about 20, 25 questions to really understand your business and what you're doing. And then, like I said, you get that filled out. We send that to our underwriter. They review it, and they return a quote to us that we present to you. But it sounds like a media policy to me.
Thank you so much. I'll connect with you offline, and appreciate Todd for opportunity. Thank you. And team, and Susan and team.
And Sri, also, just so everybody knows, he works at Tesla, so he has to mention it, and he's in a self-driving car right now. So yeah.
Nice.
Victor, and then we'll go to Evan.
Yes, thanks again. As we're talking, I was thinking about if someone has a startup that's fortunate enough to grow and become acquired. You've done all your proper insurances as your company. But in the acquisition process, what does that look like in terms of the transition of coverages? Let's say the termination of the coverages under your current company and the adoption of insurance in the acquiring company.
Yeah, it all depends if the company name is changing and going.
Yeah. Let's say it's fully acquired, everything changes, and they fully absorb.
All new policies. All new policies, or it goes under their policy. They buy you, they add the revenue to their current policy. The employees, the workers' comp will have commonality there. And if you have employees that were injured, you're going to pick up those injuries and you're going to acquire in workers' comp, you get what's called an X mod, how many injuries are reported versus how much premium you've been paying. So a good mod is under 1. So a 70 or an 80 mod, you're looking good. Once you get over 1, like a 110 or 120, then your premiums start increasing in the workers' comp. So that's the only thing that you actually really acquire that could negatively affect you or positively affect you, depending on the number of losses those workers have had. So that's the workers' comp side. But other than that, the general liability and everything, if it's the general liability for that old company would not be able just to transfer over if it's brand new ownership, if it's a new owner buying it.
Mm-hmm. And so the follow-on question is, as insurance brokers, do you get involved in the due diligence and preparation for that type of transition, or is that all handled by attorneys?
A lot of it is handled by attorneys. We'll work with the purchasing company to give declaration pages, show all the current coverages there are, to make sure that there's retro date. There's 2 types of policies. There's per occurrence and claims made. But if they're purchasing your company, they're going to want to make sure that that claims made has a tail on it. Say someone tries to sue you a few years later, well, they're going to want to make sure that if it's an E&O claim or professional liability claim, that there's a tail there that's still protecting that company that got purchased.
Interesting. Okay, thanks so much.
Yeah.
Thanks, Victor. Evan.
How long do your policies typically last? If I have a cyber insurance policy, how long would it generally last? Would it be 6 months or a year or longer?
Yeah, all business policies are annual. Personal insurance, like your auto insurance, renews a lot of times 6 months, but business policies are annual. They're not calendar. I mean, if you need insurance on June 1st, well, then it's going to renew on the next June 1st. So whenever you get your policy, it will be 1 year from then.
Great. And if we were going to contact you offline, who would we be contacting? I showed up late and I don't know who your business is.
So we are B2 Insurance, b2insurance.com. You can find my brother and I on LinkedIn, Keith Brewer, Derek Brewer. But yeah, through our website, there's a little hello button. The email will go directly to me. I get all the emails from the website. So yeah, b2insurance.com or on LinkedIn.
Great, thank you.
Mm-hmm.
Thanks, Evan. I'm sure. Anybody else have any questions? Nobody has any more questions? Wow. So guys, I really just want to say thank you. This was really, Derek, Keith, I think I put this in the Zoom chat earlier. I think you should write a book. Like,
yeah, I saw.
And I'm joking because I always do, but I'm actually really serious about that. You guys are talking about something that we know we need, but we never think about. And this is something that we need to think about. And every single entrepreneur and every single person running a business needs to know and think about. And I'm just wondering, do you experience people who didn't think about this and then all of a sudden are in a problem, or is this they eventually figure it out?
Yeah, no, it's always a problem. People don't think they need insurance when they need insurance. And yeah, I mean, I always said they should have insurance in college, right? You should have a few classes in college that talk about insurance and at least get you started thinking about insurance if you're going to be an entrepreneur in business. And I think but a book's great as well.
Right.
Yeah, and especially one for startups, right? Because it's a different beast, you know. It's kind of it's balance of when and what. So that would be really cool. Or even a blog, right? Where you start with that chart that Kelly talked about that says, think about here they are, here's when you need to get them. That would be also very cool as the start of your book.
Yes.
Yeah. I mean, I'm dead serious about the book. Like that is just, it's so important to have to see this information. So yeah.
And We would love to reserve the right to have you come back and even do a deeper dive into insurance. Would you guys be up for that?
Yeah, definitely.
Absolutely. Anytime.
Okay, cool. Yeah, we could even, we've started doing this with a couple of speakers, gathering questions ahead of time so that you can kind of see, you can talk to the questions or talk to the flavor of the questions, whatever. Would that be helpful?
Yes, absolutely.
Okay.
Yeah, and I wish some of the questions we could be more direct, but again, pricing on insurance is very individualized, very tough to kind of guesstimate sometimes.
How great is the FICO score also drives the cost of the insurance?
Only in certain states. Like California doesn't look at that, but other states do. So yeah, it depends what state you're in.
Thank you.
Does it depend upon the state that your startup is incorporated in or the state that you reside in?
Your physical address.
Cool. Well, again, thank you so much. This is terrific. And Mafe, thank you for bringing these guys to us. This is so wonderful. And who knew, right? Insurance is, you know, like actually a really hot topic for all of us. So this is terrific. Thank you.
All right. Thank you guys.
And before you guys go,
and we got two of them.
We got two of them.
Yeah.
But it's really just one person. But they really just one. Before everybody hangs up, we're gonna go to stop. We'll stop recording in a second, and then we'll do some overtime. But just a quick announcement. Next week, Simone Gordon, the Black Fairy Godmother, will be joining us following May 24th, and Fernie Chen, the CEO of Dots Live. May 31st is Derek Ali from engineers.com. And by the way, he's a Grammy award-winning.
Yeah, like a four-time Grammy award winner. He's a sound mixer engineer and has worked with some incredibly famous artists. And so he's coming to talk about his journey with us.
Yeah.
Pretty cool.
And then June 14th, Harvard Business School professor Tom Eisenman, the author of Why Startups Fail. That is not to miss. Put it in your calendars. We need everyone to show up for that. June 24th, Rosa Meza, data analytics at Meta. And then Phil Morris, who's the famous actor, the entrepreneurship of acting. And don't forget the pitch competition entry deadline is May 17th. I'm going to stop recording. Thank you all.
And June 7th for the actual pitch competition. Show up and support our folks that are entering, and then the finalists.
Awesome. Sounds good. Thank you. All right, let me pause recording. Stick around for some overtime.